The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here, Tiger Technicians Hour, and what we're looking at is the Dow is up 285 at 36,871. We've been anticipating, based on the Chapman Wave methodology, and why the reason subscribers are long, added to our core long position from the low of last year, but we added on this big trade around about 35,100 diamonds, Dow diamonds, and today I said, going 1 penny over peak C, says take a little bit off because that's our objective. The objective was to get to a D. From here on, there are other things that we look at, and we'll go through that during the show. And the weekly chart has gone E/C, and the monthly chart is E. Look at this monthly chart going right to the inside track repellent zone. So it gives it a little bit more room to the upside, maybe 36,900s. We'll see if it breaks into the 37,000s in this particular move. I suspect that a lot of effort has gone into keeping the market up right through December into the first to second day of January. And now we're going to start to see selective pullbacks and selective strength. And what do I mean by that? Look at this. The IAI, which we are long, this is the iShares Broker Dealer ETF. Fabulous session today, up 242 at 113.74. We're still long from the 45s. But what's really upsetting is that we had Schwab made a big deal about us wanting to have a broker in this particular up move. We had it, we got stopped out for a bit of a profit, didn't jump back in, and here it is from our entry point, just under 80, and it's trading at 89.28, an all-time high. In leg, I'm calling this an F. There's nothing else I can call it at this particular point, F/A. Let's call it F for now. MACD's good, stochastic is okay at 80%. On-balance volumes are very weak. Relative strength is good. We'll just see where this lands on Friday at the close. We'll see what happens in this particular stock. Charles Schwab, a broker, acting fantastically. Let's just go back now. We want to look at the S&P all-time high. S&P is up 14 at 48.11. I'd hit 48.18. I'd say any move into the 48.18, 48.22 area has to be respected. But at the same time, I don't know. I can only call this a leg F. Don't know what else to say. In the daily and the G/C in the weekly, and a leg B extends unbelievable. This is a leg B that is almost 1 year in existence. Well, I'm sorry, 2 years in existence. March 23rd of 2020, it hit 2191.86 on that very deep slide. 35% decline. And in all this time, every single month, it's made higher highs and mostly higher lows. That's not the point, but it's higher highs. And it only had one mini tiny little peak A right there. Where was that? Was it September, I think? Yep. September, it hit 35.86, and then had a little bit of a pullback the next month, and then went right on to new highs. This is unbelievable. And in the Chapman Wave methodology, what we're looking at is at least 4 higher peaks, and it's only a leg B. That means it takes all of February if there's no new high above whatever the high is in January, to form a peak B. It takes, at best, March to start a new leg C. It takes, at best, April to make a peak C, and then May to make a leg D, and then June to get a peak D. So it means almost half the year will go by before we actually see, at the shortest period in the Chapman Wave methodology, a top. Now, that doesn't mean to say you couldn't have a whopper of a decline and then make new highs. It just extends the time. But theoretically, based on not years, not decades, not hundreds of thousands of charts, but probably 250,000 to 500,000 charts, at least, D should appear in a buy signal to buy mode in any chart, especially the monthly chart, if all the technicals are looking good. And at this particular point in the monthly chart, all the technicals are looking good. So I don't know when or how, but in 2022, we should get even higher prices. Oh, that was a long way of saying that. All right, QQQ 123, down now 2 at 399. In the den, question about the TQQ. This is the 3 times long, and this person went short via puts. So I'm saying that's a really good move in terms of risk reward. I shouldn't say it's a good move because it's the QQQ. It's really, you're going to see fantastic quick gains or quick losses. But if it was just the QQQ, I would say that's fine. I have absolutely no qualms with that. However, these bursts of energy that suddenly finds 1 or 2 stocks within a sector that leads that sector higher, that's what you got to be careful of. I'm with you. I think that the Qs are lagging. I don't know about shorting the way you have. That's a little bit gutsy. At the same time, I have no qualms since you understand all the risk and you understand the rewards. I'm just saying to you what you really want to see without any significant bounce of maybe it's at 399.71, any bounce to the 402 area. You want to see any rally kind of fizzle, maybe go sideways, and then you want to see 396.50. I would suggest to you that if the QQQ goes under 396.50, take quite a bit off. You can keep some, but take quite a bit off because that'll be a fantastic reversal of fortune for the Qs and good fortune for you. So, okay, let's go on. IWM, that's the IWM we're looking at here, is now off the high. It's up 10 cents at 225.47. It's struggling a little bit, and what I'd said was that I thought that the value stocks are actually acting a little bit better. I don't know if that's going to continue. IWN, that's the N for Nancy. iShares Russell 2000 Value ETF. Yeah, this is doing very nicely. It's at 169.59. Then in leg C, let's see if this is able. I want C to continue higher. I don't want C to stall here and then just make a quick D and pull back. So I'm just saying that for subscribers, they know today I was looking favorably at the IWN. Let's go to the gold. Gold is bouncing back here after a whopper of a move down underneath the 14-period moving average, just about to the 50-period moving average. And what we are looking at here is gold is up 9.7 today at 1809. I'd said out of 2 out of 3 sessions in the 1818 to 1822 area would be what I wanted to see to say, hey, now I think there's more of a change. And what happened is on Friday, it went to what am I talking about? Yeah, Friday the 31st, it went up to 12. It actually went up to 1231 and closed near there. And then yesterday it went even higher. It went to 1233 and then had a whopper of a pullback. And that's what I'm saying. That's why I'm saying you need a couple of days in that area for gold to start to show that it's got the tenacity to stay on the positive side. And that also happened to occur at the same. Let me just show you silver. Silver had also a pullback, not as bad. It's actually holding a little bit better, but it was the dollar that was actually acting really well yesterday. I'll be back in a moment. Basil, Chapman, Tiger Dickinson's Hour. That was at 294.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. Basil, Chapman here. Tiger Traditions Hour. Dow's at 281. It's a divergence here between what's working and what's not. And I have to tell you, you're going to have to be really selective. Look at this. WBA, Walgreens, Boots, Alliance Inc., drugstores. I was asked about this as we were wrapping up on in 2020, 2021, the last couple of days of December. And most importantly, what I was saying is that within the context of all these different aspects, even within the Dow itself, you've got some stocks that are really taking off and doing very well, and some stocks that are just struggling. But my biggest concern was that so many indexes and so many key stocks were making peak D and very quick E's. Usually that pertains to strength occurring at kind of the end of a move, and therefore you've got to be careful for some kind of a pullback. So WBA, this is Walgreens, it's up at 53.41. It's up 35 cents. Leg E, look at that quick peak D to leg E, although E is quite strong. It didn't just stall modestly above. Look, this is the same as the Dow. It's in the Dow, you see. Look, C to D. I could just go on and on with so many stocks that are doing this very thing. So the question was, the questioner said, I'm long Walgreens, as we had discussed some time ago. This is George from New York. A lot of people like to hear what George is doing. And it's had a spectacular move from 43 back on the December low, December the 2nd, to today's high of 53.97. And I would say that that's a 10-point. That's what was that? That's 20. It's about a 22% gain. Very nice gain. And what we are looking at here is that within the context of within the context of the MACD, strong. 9-point moving average with the price above the 9, the 9 above the 4, strong. Let's see, we've got the stochastic at 89% strong and flat. On balance volumes a tad overbought. So I love this. Where would your next entry be? I would have to say, because you do have patience, I know that you're one of those tigers that get your positions, you set them up, you do your homework, and you just sit there and you are prepared to wait. You're a very patient person. You've been rewarded for that. Congratulations. And I'm just going to say, the ideal place would be a pullback just under 50, between 50 and 49. But I'm going to watch this closely because I think that this is in an area, that whole drugstore pharmacy area, that I think we're going to get a test over the next 2 weeks. Don't think it'll be longer than 2 weeks. A test over the next 2 weeks to say, are the pharmaceuticals like a CVS also at an all-time high as we speak? DE as a recycled F/B/G/C with a doji candle. Well, all of them are really very good. And this is a leg E in the weekly. All of them are, on a visual basis, I would say a tad overbought. That doesn't make them overbought. Just on a visual basis, they look kind of overbought because they've just gone vertically up. Now, what I am going to say is that together, I'm putting them together, WBA and CVS, putting them in the same category for now, although CVS is the leader. It's like CVX and Exxon. See, there's a Chevron and Exxon. They have in the same category, but different chart patterns. As Chevron's better than Exxon. In this case, CVS is better than Walgreens, but Walgreens has the potential with this pattern right here in the monthly chart, Chapman wave falling axe formation right there, and having broken out, it has the potential to move to a leg D in the monthly, and the D would be over the peak that was made back in, was that January? April. Let's just say 57 area. So right now it's at 53, so it would head towards the 58s, and I suspect that would be the target. Then as a laggard, look what it has, whereas CVS is at all-time highs, this has got all the way to the 85 area. It's got a long way to go to the previous high, much higher peaks. So I'm just going to say at this particular point, Walgreen is looking as if on an intermediate term for 2022, it's in play, and that any pullback towards it's at 53.42. I would prefer to say between 51 and 50, but I'd like to say, give me a yell when it gets there, because the pattern that it's in right now with the weekly Chapman Wave Inside Track propellant zone that was a repellent zone is in the 49s. So let's look at it when the time comes. But the ideal place is 51 to 50, but it might be just a tad under 50. And that would be the ideal place to add to it. Now, what we need to do is, you closed your puts. Oh, well, you had a fantastic move. Congratulations. Very nice. Yeah, I am looking out days and days. You're done. All right, that's very nice. Congratulations. Question now, the TLT, let me just also do this in the context of what we're looking at today. So let me just see, Paul says, did the guy come after me? He's talking about my eye. No, remember, I have no problem whatsoever with my eye. It's just that I got this huge knock when I slipped on the ice on the granite step on my forehead, and that's all gone from the forehead, but the blood vessels, etc., all settled down in the eye. Just it's compensation that the nature does for the body. I'm prepared to accept that. I have no pain. I'm only wearing the dark glasses because it don't look pretty. That's all. So no, I didn't get popped. Haven't had that experience for a very long time. Thank goodness. Remember the old boxing days, which was very short. I never really did like boxing. Okay. So we're looking at now the Dow's up 311. That's the reason why a question came in. Are you short yet? No, I'm not short yet. The reason why I didn't want to go short, even though everything that we were looking at suggested that it's going to be very selective from here. I love the action at this particular point. And yes, it's leg D is where I usually set up some kind of a short position. But you remember the last one in the Chapman wave went to a leg E and then a peak E and then a peak F at 36,565 on the 8th of November. That's the very day that we did start to short on the downside. No, I at this particular point, I just see too much residual strength. You know, I grew up Cape Town, South Africa, as a preteen. I grew up walking along the ocean, the huge, massive waves, right by the rocks. And as a result, I'm really attuned to tides. And not on a scientific level, just on my own emotional and empiric level, stuff that I've watched. And therefore, that's the reason why I look at markets as tides. And right now, the tide is still going up. I think we're within a couple of days, maybe, of maybe having a reversal. How deep a reversal, I don't know. Let's see, we have Greg and Austin. Greg, you want to look at IBRX, is that correct?
That's correct, yes.
Okay, I'll be back in a moment. We've got a break coming up. Dow's up 295. Oh.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, we're back, and the Dodgers had another spurt up 339, and we're on well. Let's go back to Greg. We're looking at let me just see, IBRX. Trading at $7.07, down 46 cents. Immunity Bio Inc., evidently they treat lung cancer. So what are you doing, Greg?
Hi, Basil. Morning. Happy New Year.
Happy New Year to you, and hopefully it's a healthy and successful year.
Right. Thank you. Well, I saw this moving yesterday, and I give credit where credit's due. I bought this on smaller time frames using the Chapman wave and did pretty well on it, but I sold later in the day. And I was wondering if this looks like it might have enough strength to make it a D in the daily, right up around that $8 and take out that left side.
Right. Now, one of the things that we look at when we're talking biotech is, number one, there are just a slew of issues that go on with the biotechs that are behind the scenes. You don't see it always in the stock, but you do see it reflected in the stock when that news comes out. And because the news, what has happened is this is the longest that whatever the news is on this particular stock, Immunity Bio Inc., whereas before, back in November, it had a big spike for about 3 days from the $5 level up to the $7.50 level. It then gave everything back and went to a lower low. This time, it's gone from the low that was made on December the 15th. Yeah, December the 15th at $5.11. It's gone peak A to the 21st of December at $6.79, pulls back. And then the next 2 days later, it makes a new recovery high in leg B and goes to $7.37, and then pulls back just for 1 day. And then it goes to an even higher high, way higher, not way, but higher than it was. Let me just double check that high that was made at $8.01 back on the 30th. What was the high here? $8 and, oh no, $7. $7.99, the high on the 28th. I thought it went higher, but it looks like, no, it didn't. And then it pulled back very deeply, unlike the other pullbacks. But what happened yesterday, there was such a burst of energy that it went right back to the 750 level, and today it's down at the 701. So percentage-wise, I mean, just think about that. Today, if you had bought near the high yesterday, boom, within minutes, you're looking at 7% decline. Now, that says to me, if I look at the weekly chart, can you see how the weekly chart, since it broke down, it was once in the 45 range, and then all of a sudden on the week of the 2nd of April, it goes underneath for the first time. It goes under the 14-period moving average. A couple of weeks later, the weekly goes negative with the 9 under the 14, and that's the way it's been ever since. Now it's flattening out. So for me, the weekly chart is saying, okay, now it's trying to build a base. But that's on a technical level. I think when it comes to the biotechs, there's, for instance, we have someone in the den. He does a lot of research on the different phases of whatever the drugs are within the different biotech sectors that or stocks that he's looking at. And as they're getting closer and closer to revealing something, whether it's good or bad, it doesn't matter. But once you're getting close to some kind of reportage, then that's where you start to see the kicker. The fact that this had that week and a half of rallying, then a sharp pullback, and then yesterday was up again, today's starting to pull back, says to me, it's in play. How you actually trade this is really tough. So, Greg, what I'm going to suggest is this, look, even as we're speaking, it's just dropped a couple of pennies. Now it's down at $7. Right, yeah. So it's really tough. What I suggest in stocks like this is you take on a small position because you've done your homework. And that small position, you just have to make up your mind. Is it like a buy and hold and you don't care because at some point you want to wake up and see that this thing's up threefold or fivefold? Or do you sit there saying, oh my God, geez, now I've just lost 50%, oh, 70%, now I've lost 80%. And then as you're about to sell it, or you do sell it, the very next day, something happens and the darn thing just explodes to the upside. So let's just set that aside for a moment and say, look, it's a biotech stock. Let's look at it purely technically if it's possible. And all I can say is that the action, even with today's pullback, the action that I've seen so far is suggesting that it is in play right at this particular moment. In play meaning it has potential for quick pops towards the $8 area, and hopefully the next one goes into the 830s and holds. So what do you do? So you have a small position now?
No, I don't have any position, but when I was looking at it today again, I I was thinking if it doesn't hold that support at 695, around 695, that's not a really good showing for it today, and I would probably pass on it. And
okay, that's exactly my thinking. What I will say to you is this. If it rallies, now it means you're going to have to give up something, but if it rallies 1 penny above yesterday's high of $7, let me get this right, $7.60, yeah, $7.60. If it can go to $7.61, I would start a small position, and I would put a tight stop. Why? Because this would then be the leg that should go to leg D if it's going to do it at all. So it means you're giving up. It's now $7.02. It means you're giving up 50 cents. Wow, that's it's like 2.5-3% already before you even get in. So that either that, or why don't you wait until tomorrow? See if it's able to trade and hold for 2 hours during the day above 725. Then I would say, you know what, get a little foot in the door, and I would only add if it starts to rally and preferably breaks above the high of yesterday. That's the only way I would do it. But you're going to have to be agile. If you're not able to follow it almost tick by tick, I would just say, step aside. Let's wait for the base in the weekly chart to form a bigger base, and then you'll have something more cogent. Hope that helps you.
Great plan.
Thank you very much for calling. Always appreciate it. So, folks, a couple of things I wanted to do. I promised, WBA, I did do that. I mentioned that yesterday we had Ernie was, we were looking at the bonds, and I said, this leg down in the TLT has taken out all support levels, even the left side, 144.46 level of November. It's below that now. It wasn't yesterday. It was getting there. Now it is below that. And that's just suggesting to me that the pattern that I had identified in the weekly chart that says that bonds are stuck in a range, and until they break that range, they can go sideways between the 154 area in the TLT and the 141, call it 140 area in the weekly chart. So I agree with him. He was looking towards the higher side of yields. And don't forget Mark. Mark, I'll be right back with you in a moment. We're going to look at rig. Hold on. I'll be with you for rig. I was looking at these this morning. Wow, nice move on rig. I'll be back with Mark in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Dow's up 325 and we're looking at, this is very interesting. We're going to go straight to Mark in Fort Collins. We're looking at RIG, Transocean Limited. It's $3.29 right now, up 15 cents, up 4.81. When you're that low, you don't have to have much of a move to get a good percentage gain. This is one we've owned periodically, but we don't have it now. In fact, I was looking at FANG this morning, F-A-N-G, another one of our Tiger F-A-N-G. F-A-N-H. That looks terrible, whatever that is. No, we want F-A-N-G, and that's all. Look at that move to the upside. What a beautiful move. Yes, I believe that you're in the right area. Mark, how you doing?
Good, how are you?
I'm good. So what do you have with RIG? Did you start?
This at 3. I've got it at 3, and I'm looking for a price target from you. I was looking in the 350 range is my initial target. It's kind of doing an ABC up on a 30-minute chart, and wondering what you think.
So 338 is the 200-period exponential moving average. It's trading at 327 right now. So one of the things I was looking at, and it's so funny, every once in a while, I just do this periodically. I take out my CD introducing the Chapman Wave methodology. A lot of people, actually thousands of people have it, and it's kind of out of print, and because not that many people these days get computers with a CD player, I've just kind of scrapped it. I do have some that I have left over, but I kind of went through some of one of the chapters, and the chapter was the restart. And I'm looking at some of these oil stock, and I look and I say, you know what? These are absolutely perfect Chapman Wave restarts. And the whole thing about a restart is the price makes a low, then it rallies and looks kind of good, and it goes to a peak A, maybe even a peak B, and then it pulls back quite sharply. But it doesn't take out the left side low. It means that the trigger of the buy signal is still extant. It is still in play. And then what happens is there's another move up, and it goes, in this case, it goes peak A and peak B again, and it fails. It makes the pattern that I call the dreaded H that is successful and goes to a lowercase m. So the arch formation gets repeated. It gets repeated twice. And then what happens is there's a combined, it's called the Chapman Wave overlapping wave. Now all of a sudden you've got your peak A, peak B kind of minus because it failed, and then another peak A and another peak B, and then together this leg up goes over the first B, the one on the left side, and then the earlier one, and now you've got an overlapping wave that says, aha, now you should get at least a leg D, because that's the rule of the overlapping wave. So you're in leg C. It doesn't tell you where you're going to turn down. There's a whole bunch of techniques for that. It doesn't tell you how much, but it does say there should be some kind of a pullback and then a higher high to make your fourth peak, and that's ND. So I like what I'm seeing now, because you've got the restart. Usually I had a methodology. I only wish over the 20 more years, it's 30 years, I've had TradeStation. It was initially supercharged, and all this time I haven't called them or said, hey, why don't you get a straight line that I can take from one place to the other, and as I lift it up on the right or the left, it gives me the percentage of the move, the incline. I mean, that would be perfect. Well, I don't, and that's number one. The other is I want a trend line that I can fix in one place and then just pick it up and move it in an arch formation. Now, what I wanted to do is the low that was made at 263 on the 6th of December to the low that was made 3 days ago, 31st of December, I'd like to take that straight line and swing it, and I don't know if I can do this. Let me see if I can do this now. What happens is as you do that, you're moving, so you're actually moving. So that would be, it's like that. Did I just do it? No, I missed the line. I'm swinging it, and I'm trying to show you that there's a technique that I have that takes duration and creates a different template to make it now height. And in this particular case, I'm not exactly right. It says there should be a move from the left side time. If I take that line and I just turn it vertically up, it should take you towards the 348 area. I'm sure you're pleased to hear that.
Yeah, I was actually looking at falling axe on the what is it? You would
weekly.
Get.
Yeah, on the weekly and the monthly, actually, yeah.
Yeah. Looking at the line, if it's going to intersect with that falling axe line or not.
Right. Now, I like to be conservative when I do that, so I go into the bodies of the candles if need be, just to get the biggest decline, not the highest, and that takes me to roundabout. It almost comes to the same thing. That would say 338, 340. It's the same sort of thing. I would just say to you on a weekly basis, if rig over 2 weeks, over 3 weeks, if 2 weeks there are closes above 225, preferably there are two closes over 3 weeks above 247. I think you've got something in the oil sector, the whole offshore drilling, oil and gas sector, that's saying this is very important because you're starting to get a second wind in the area that had a very successful run all the way from, even if you just take the last one from about April into July, going from the 312 area to the fives. I mean, even that's a big move. So I'm looking at this and saying, is this the start of another move? Is oil going to be in play, even though there's a chance that the market pulls back? And the answer, I think, is yes. I think so.
Okay, cool. Hey, when you get a chance, look at ARQQ again and let me know if there's you think that's going all the way back down to 50.
We'll do it right now. ARQQ is making the arch formation, the dreaded H formation. All of these stocks that were in play and had spectacular moves. This is a stock that went from single digits to the 41, 46 high of the 3rd of December, plunges to the 200-period moving average. I just think it needs more time. I don't know if it's going to break down into the 14s, but it's at 19, and there's a good chance it's going to try for the 16 to 15 200-period moving average again. I think we just have to have patience and step aside from this area. This would include, let me just see Square. Yeah, Square's at a multi-month low. Yeah, you see, we're all of those stocks that are in this whole kind of the software area that pertains to what was in favor, especially in favor for Cathie Woods before. I think they're all being hit.
Used taking a beating today too.
Yeah, so I'm just going to say, have patience. I think that their next big run is a little later on in the first quarter of 2022.
Okay.
So just have a little patience there.
Thanks for your help.
Thank you for calling. Always appreciate it. And a happy New Year and a healthy New Year.
Yeah, you too.
So, folks, so this is really the question. The question came to me in different ways. Both have done that. Oh, wow. Time is flying. Isn't time flying? Now, I believe that tomorrow I have to do my show between 8 and 9. Let me just do this. I didn't even check the YouTube to see what questions were there. I'm sorry. I apologize. I've been a little bit discombobulated. We had tests, the CPR test today. for today, and they canceled the day. They canceled the whole day for hundreds and hundreds of people. I don't know what to do.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. In this last section, there are a couple of things. I had a couple of questions. Let me try to get to as many as possible. Sophie. This is Sophie Technologies Inc., digital financial services with mobile applications, trading at 14.85. It's down 85. Look, it's the same pattern. It's got the rectangle formation. Dreaded H goes to a lowercase m. You have to have patience. These things are going to work. Not just yet. I think they need to resolve the downside move by going sideways and developing some kind of a base. TM, this is Toyota Motors. Toyota Motors at a high, all-time high. Fantastic. This I'm sure has to do with the availability of cars. They're pushing prices really high. I can tell you almost firsthand that it's a big problem, and you have to be very selective. You have to decide what you're going to do. Most importantly, what we are looking at here is Toyota Motors is up. Amazon, question about that. Amazon is trading. Yeah, remember Amazon, as far as type it here. AMZN. I think Amazon had its opportunity and it hasn't taken it. Now it's going to be stuck for a couple of weeks, maybe 2 months, and then maybe it comes on again. But it's stuck. It looks like a yield. It looks like the same pattern. Big U-shaped pattern goes to the bottom. It's kind of stuck here. It's down, so be careful. And I suspect that we're looking at that in many areas. Some of my best stocks for subscribers, we've had huge gains. And I said, now you've got to be careful. We've taken quite a bit off. We've got core positions. We spoke about that TMO, Thermo Fisher Scientific. Look at that move from the peak D, all-time high of in the 672 area just 3 days ago. Now it's at 616. I would say that that's serious. That means we've got a rotation in the scientific area, medical area equipment. This is serious stuff. So I consider that we are really close to some kind of digestive phase. Haven't done anything yet. Maybe tomorrow we will. And tomorrow I'll be doing my show, I believe, I'm not 100% sure, at 8 o'clock, 8 to 9 tomorrow morning. Hope you can be there. Check out my opening call, my daily newsletter, and have a wonderful day. Great programming coming up. I'll do the news and then I'm out.